Hello, everyone. Welcome to Tea with TPS, informal conversations with thought leaders of India and abroad. Today, we have a very distinguished banker whom everyone would want to know. They keep all our money. Shri Adikesavan, who is the Chief General Manager of the State Bank of India. What else? So, one of the most critical positions in India, in our economy, in our banking field, an area with heavy responsibilities. I have met and known some of the people who have worked in this position itself, but I have not seen anybody more articulate, more willing to talk, more willing to express his views than Mr. Adikesavan. Because bankers are somewhat reticent. I'm not saying that he speaks too much, no, but he takes the effort to make people understand policy, particularly agricultural policy. I had him on my program on AsiaNet, and he talked in Malayalam about the various things that the state bank does. And no other institution is as crucial today as the State Bank of India. When there are good days, the bank is doing very well, everybody is happy. But when in bad days, the bank becomes even more important. As resources dwindle, the use of resources, how people are able to make use of their money, how to get their interest money, how to invest properly. All these are questions which are plaguing people. And people like me who believe in a retirement pension and some interest from banks, each thing comes as a shock. So it's as the economy dwindles, we have many problems. But at the same time, I hear good things about the economy. This is what I want to explore today. For example, we have been told that the foreign investment in development in FDI has grown in this period. That to me sounds ironic, but I'm sure you will explain to us it happens. Remittance has gone higher than before. And so there is, at least in the economic circles, the banking circles, etc., it is not all that gloomy. You can confirm or deny that. So there is so much to understand. And there are some people who are very severe critics of the government, that the government has not done anything, or even if it has done too little, too late. And therefore, the prescription is to have structural changes. I don't know what structural changes are possible, what you're all thinking about, etc. So they say that the securing the economy or saving the economy from disaster was in the very early stage. Many governments did that in so many ways. And so the critics say that we missed the bus. We did not do that. The usual phrases used is, put money in the pockets of the people, enable them to spend. All that we did not do. We just locked everybody and thought that the pandemic will go away. The other problem is planning. How do you plan for what? None of us knows, not even the astrologers know, not to speak about the scientists, know where this pandemic is going, when it will end, what will be the world left behind by the pandemic. All these are uncertain things. I compare myself to a soldier who is in the battlefield where bullets are flying around you, and you still go thinking that none of them will hurt you. But there will be one bullet on which your name will be there, and if it strikes you, that is the end of the story. And that is the kind of uncertainty that we have in the last 1.5 years. So it imposes a tremendous amount of responsibility on people like you who have to somehow manage, like the home, the head of the family, how he spends, how he borrows, how he restricts his expenditure, cut down expectations. So all this is going on. So I think you are at a very crucial time. Since the demonetization, I don't think bankers have ever slept. That is the feeling I have. But anyway, it may be different. Your experience may be different. So I would like to explore this. So what I read is the economy has become considerably smaller since the pandemic. The 3 years are very crucial. And at that time, unless we make very major changes, structural changes, it will be very difficult. Then fewer goods and services. Goods and services have dwindled. So less of things available, less of loss of labor, loss of capital, employment crisis. All this on the one hand, and the struggle of the government and the bankers and the private industry on the other. So, what are the challenges that you have faced so far?
Thanks, sir, for the introduction and for having me on this program. And it's always a pleasure and a privilege to talk to a person like you. And you have also set the context for this conversation so well and so articulately. And I would like to tell you the macro picture as I see it, as far as the Indian economy is concerned, and which is also linked to the global economy. Then the micro aspects of the problems faced by the man on the street, whether it is a saver, a depositor in the banking system, a retail trader, an MSME entrepreneur, farmers, people who do ordinary jobs and get by, the workers, for instance, problems faced by these categories of our citizenry, and then the actions taken by the government, whether they are on the right track. If they are on the right track, what is right about them? What is wrong about the government policies also? What is the outlook for the future, and how do we expect the economy to regain its momentum and move forward in our growth journey? Two or three things by way of formal kind of setting of the contours of this conversation would be in order, because you also mentioned the FDI inflow into the country as a positive aspect which economists have been seeing. I would like to begin with that because I also tend to think that the kind of appetite that global equity has shown for investment in India is a positive sign, is an indicator of the confidence that the investors have about the Indian story in general, and also the decisions taken by the government in the recent past in particular. Coming to the figures first, it is quite surprising that in 2020-21, the FDI inflow into the country was to the order of $60 billion, $59 billion to be exact, as compared to $49 billion in 2019-20 and $44 billion in 2018-19. So
those were the good days. Those were the good days.
Those were the good days. So, as you said, paradoxically, in a year in which the global economy shrank, and as per the statistics put out by UNCTAD, United Nations Conference on Trade and Development, when global FDI inflows contracted by 35%, FDI inflow into India improved by about $10 billion. And this has been continuing. There are two positive spin-offs to this. One is it has resulted in surplus liquidity in our system because money has come in. Number two is it has led to a surge in our foreign exchange reserves, which is a macroeconomic strength, undoubtedly. I think even the most critical person would have to admit that the government has done well in boosting or taking steps to see to it that our foreign exchange reserves, which were at the level of $475 billion in March 2020, stand today at a level of $620 billion. And we are fourth in the order of countries globally in terms of the foreign exchange reserves level that we hold. The first is China, the second is Japan, the third is Switzerland, and the fourth is India. That is a major strength because we need not worry about an attack on the rupee or a foreign exchange crisis anymore because the reserves are substantial.
But when these people, when these people come and invest in India, they expect returns. Where do they get that?
Yeah. So that leads me to the whys and the wherefores of the FDI inflow into India. So in fact, the answer to the question is that the foreign direct investors, and mind you, these are not foreign portfolio investors who come and invest in the stock market and wait for the stock market to rise, sell the stocks and make money and get away. The figure that I mentioned to you is foreign direct investment into companies which are operating in India. And it shows, to my mind, the preference of the foreign equity investors of India in relation to other emerging economies.
So which means they have some confidence in the growth of the economy. You cannot have returns if you don't have activity. So this money goes into the action of the country, the activities of the country.
Yeah, I am coming to that. So why is it that the global equity flows have chosen India? To my mind, even though we had recorded, along with the other major economies, perhaps except China, a negative growth in 2020-21 of minus 7.3, we should remember that the primary sector, which is the agriculture sector, had shown a positive growth of 4% even during this pandemic year. During 2020-21, when all other sectors of the economy had contracted, the agricultural sector showed a surprisingly positive rate of growth of 4%, number one. There were elements of growth across the rural economy in 2020-21, not only reflected in the growth in the agricultural segment alone, but also in areas like tractor sales. Tractor sales during 2020-21 was the highest in the recent 4 or 5 years, surprisingly. Fertilizer sales. Yesterday, I was talking to one of the biggest fertilizer companies in India, which is IFCO. They have sales of about 27,000, 28,000 crores of urea mainly and potash also. They also said that not only was the sales higher in 2020-21, the trend has continued in the first quarter of 2021-22 as well. So rural economy last year has done well, not so much this year up to at least July, because the second wave has impacted or hurt the rural areas equally, if not more than the urban area. And therefore the FMCG sector, manufacturers, people who are active in the rural areas now say that the rural area is not likely to show the resilience that it had shown last year. Coming back to the point of why the global investors are keen on investing in India, to my mind, is that the primary sector has been doing well. Number two, large sections of the people who still live in the rural and semi-urban areas, in the tier 2, tier 3, tier 4, tier 5, tier 6 cities, who constitute the large majority of our population, were not affected by COVID, the first wave of COVID. So the demand that is expected from the consumers in these areas are likely to continue. That is number two. Number three is the government, meanwhile, has also taken a few steps, the foremost of which is that the government has said that apart from 4 core sectors, the government will not have any central public sector enterprises in any other sector. That is atomic energy and space, power and petroleum, defense, and then banking, insurance, and financial services. So they have taken a clear decision that...
But those areas, those areas are also open for FDI these days. Some of those areas in limited sectors.
Yeah, no, the difference is that even as, for instance, you are right, that these areas are open for FDI, But the government said that they will try to maintain strategically units under their control in these sectors, even as you said, for instance, in the insurance sector, FDI has been recently allowed up to a level of 74%. In banking, it was allowed up to 74% even earlier, but the insurance sector has been recently opened up. But considering the strategic importance of the sector, the government has decided that government-sponsored entities or the CPSCs will be maintained in these four sectors, but in other sectors, it will be open for private sector money to come in, for foreign direct investment to come in, compete, make for quality products, and thrive on the demand that is there in this country. So there, I would like to tell you as well as the viewers, for you, this may not be information. See, the global economy ultimately is made up of the people who live on this planet. Out of 7 billion of people who populate this planet, we should not forget that 1.3 billion people live in India. And out of that, surprisingly and quite positively, it is said, and I think this is valid and correct, that 50% of this 1.3 billion are reportedly below 29 years of age. So think of and most of them are at the aspirational level of development. And that is where I think the potential for development for India is much higher than the potential for development of a developed country like Japan. And you must also have been reading about Japan. The constant refrain of the Japanese policymakers is that there is no way domestic demand in Japan can be increased because it has reached a status of development where people have washing machines, people have maybe 2 or 3 televisions, maybe 2 or 3 automobiles or cars, and there is nothing much that they would aspire to acquire in the domestic market. So the only way a developed country like Japan, which has got a per capita GDP of $40,000, can generate growth is through only exports. Even China, which is compared with India, has got a per capita GDP of $10,000. The US has got $65,000. Most of the European countries have got per capita GDP of $40,000. India is still at $2,100. So it presents a problem as well as an opportunity. The problem is that we have millions of people who are below the poverty line, living on the margins, who want to come out of their levels of poverty. So that is the problem that we have to tackle, putting money in the hands of people so that there is enough to get by, there is enough to build livelihoods. But what is the opportunity for people who manufacture? What is the opportunity for people who provide services? That if the right kind of growth impulse is given, here is a vast mass of people. And the next vast mass that I can think of is Africa, which is way behind, 1.126 crores of people as a continent and not as a country, and with all political problems. And here is an investment destination which is politically stable. Clarity of policy is there, never mind the hiccups, etc. I am also not totally supportive of the policies, of all the policies of the union government. But I believe, based on an analysis of the decisions taken, and it is evidenced further by the inflows that we have been able to attract, also the well springs of recovery that we see in certain sectors, that there is a lot that is being done right by this government. And therefore, if this recovery were to take shape, and God forbid, if the third wave or any other unknown were not to negatively impact our economy, then I believe that the scope for tapping the potential, for riding on the Indian growth story, is even higher. And this is why global investors, global equity is happy to come into India. And then we come to the happenings or the developments in the rural economy. So if you allow me some more time, I can spend a couple of minutes on that before I
go ahead.
Yeah. So on the rural side, as I was saying, last year there was infusion of funds. There was infusion of money into the pockets of people. We can say broadly at least 3 ways in which the governments, both at the center and the states, put money in the pockets of people. I can speak for the central government because the states, there are 28 states, there are different ways in which the states have put money. For Kerala, we know, for instance, the way the social security pension was increased, even though, by a few hundred rupees, etc. But then they ensured that this money reaches the poor. They also ensured that welfare kits, which would provide for the normal food requirements of a household, was provided free of cost. But speaking for what the central government, union government has done, right from March or April of 2020 up until June 2021, every ration card member of a ration card, that is, every person eligible to receive ration, received 5 kg of rice or 5 kg of wheat totally free, released by the center through the public distribution system under the Prime Minister Garib Kalyan Yojana. So this was transfer in kind of a commodity of daily consumption, which was equivalent to a cash transfer, number one. Number two, there was a scheme introduced in 2019, which is called the PM Kisan scheme, under which in 2019, December, if I remember right, the government decided that every year they will transfer 6,000 rupees to every farmer owning any piece of land all over the country. And the budget provision last year for 2021-22 has been about 65,000 crore. Government not only provided, government also ensured that this transfer happens on the due date without fail. This happened. The government also transferred 500 rupees each per month to 20 crore women beneficiaries in 3 months during 2020. So these are instances of cash transfers which have taken place. And my friends in industry who are operating in the rural areas tell me that this is the reason why rural demand was buoyant last year. Tractor sales, for instance, are inexplicably, paradoxically high in a year where everything was going down. Why? Because money was transferred to the accounts of farmers. And mind you that unlike in the past, this money transfer happened through the accounts of farmers, through the accounts of women beneficiaries, which were opened under the PM Jan Dhan Yojana campaign and under the bank, basic bank opening campaign, with the result that there was no leakage whatsoever in this money transfer. If 6,000 rupees was transferred, the entire 6,000 reached the beneficiaries. If 1,500 was transferred, the entire money reached the beneficiaries. And this is one of the reasons why rural demand was buoyant. And I shall finish this response with this only additional point. People, that is manufacturers who supply wheat flour to an FMCG like Hindustan Unilever, told me that wheat flour sales in rural areas were affected because of the free wheat supply that the government did under the PM Garib Kalyan Yojana. So therefore, I think the transfers have taken place. Money transfer has also taken place. And unlike in the past, because of the systemic transfer, it has taken place without leakage. Whereas earlier, we used to hear this statement that only the leakages actually reach the poor.
No, but Adi, can you sustain it? How long can you sustain this? We don't know how long the pandemic will last. We don't know what lockdowns are coming. So are you optimistic that even if the situation gets extended, this kind of mood of some kind of, shall we say, satisfaction that things are going well, will that continue? Or you are afraid that if there is a third wave and production becomes less and economy shrinks, this happy situation will change?
Yeah. I think that is a very valid question because my concern is also predicated or woven around the fact that you are the thesis that you are trying to propose, that how do we sustain this kind of momentum, whether it is in the rural areas or in the urban areas. One of the key segments of our population which needs further support, in my view, the workforce. Out of India's total workforce, 20% it is said work in the formal organized sector. Out of the 80% who work in the unorganized sector, 40% or 50% of that total work in the agricultural segment where cash transfers are taking place. Along with this, the Manrega allocation has been increased. And I hear from mission directors in different states that the cash transfer takes place within a matter of about 14, 15 days, which means that people who undertake work under Manrega are getting the money. That's a positive thing. But I believe that people who work in the retail trade sector, that is employees in the retail trade sector, employees in the MSME sector, their incomes have been affected. And I believe it is time for the government and for those in authority to think of some kind of transfer of money or liquidity to these people for them to survive the hard times that they have been put through, both on account of the last year's incidents of COVID, as well as the second wave, which has come as a bolt from the blue. So therefore, this segment, which is non-agriculture, non-salaried, but thrives on the MSME sector, employees of the MSME sector, the retail trade, the unorganized sector, the unskilled laborers.
How do that remains uncovered? That remains uncovered.
Yes,
but but how do you do that? Because they are totally disorganized. They, I mean, at all not organized. They go to a workshop or a shop to work for a day and then do something else. So it will be very difficult to even to catch them. Is that why we hear about these suicides of traders? Because you don't hear about suicide of farmers anymore. You hear about suicide of traders. So there must be some reason for it.
Yeah, I shall come to that. Now, the government and the RBI's approach has been to ensure liquidity in the system per se and make banks lend. That is under the Atmanirbhar package. The government's approach has been to guarantee loans being given by the banks to the MSME sector, loans being given by the banks to street vendors, for instance, loans being given by banks to the unorganized sector. So that is one aspect of this approach which has been pursued by the government. The RBI has, on the other hand, seen to it that there is enough liquidity in the system per se. And I realize and I understand that systemic liquidity doesn't mean anything for the man on the street. For instance, the systemic liquidity surplus as on date is about 7.5 lakh crore, which means the banks together in this country are sitting on a pile of 7.5 lakh crore of rupees of excess liquidity on a daily basis. So there is
no demand. There is no demand for loans, etc.
There is no demand for loans because there is a demand contraction which has happened in the market. We all know because of the localized lockdowns. See, people going out, people traveling, etc. People are not traveling like before, and unless people travel and spend, demand for goods and services may not reach the level of the pre-COVID kind of the demand that was there in the economy. But be that as it may, having seen to it that there is liquidity in the system, now the dichotomy which has to be solved is that while this liquidity is getting reflected in what you and I call, and the chattering classes might call the capital market or the Bombay Stock Exchange, there is money in that market, but there is no money in the physical market where you and I may go and buy some vegetables or buy some groceries. So that is the dichotomy that has to be solved. How do we transmit the excess liquidity, which is probably flowing to one segment of entities? How do we transmit this liquidity down to people for whom this liquidity really matters?
In a productive manner. We have to use it productively also.
In a productive manner. And there I find efforts being made. So efforts are being made both by the central government and the state governments to provide incentives by way of interest subsidy, etc. In some cases, for instance, whether it is for business or farm loans, right now, loans up to the amounts of about 2 lakh or 3 lakh are attempted to be made available at an interest rate of say 4 to 5%, which is on a par with the deposit rates that you will get. Which means actually the net interest rate real interest rate is zero for a borrower. But whether that is enough is a moot point. I would also personally, not speaking on behalf of the bank, I would personally urge that the fiscal deficit, concerns about the fiscal deficit notwithstanding, there should be some attempt at transfer of money, identifying the beneficiaries properly to this segment of unskilled workers, workers in the unorganized segment, employees of the MSME. I think the government and those in authority ought to do that, and it will provide the impulse for raising the demand for the productive sectors of the manufacturing sector also, and it will do the positive things that the transfer of money did last year on account of the PM Kisan transfer, on account of the transfer to the women beneficiaries that I just now mentioned.
But you talked about the relative stability in the farming sector, right? Is that the reason why the farmers strike and what the government wants the farmers to get? So the government thinks that that's good for them. They don't think it is good for them, and the situation has continued for almost a year now. Is it because they are already fairly well endowed, and even with the strike, they can sustain their lifestyle in the farm? Is that the reason why this is continuing? Because it doesn't seem to dwindle a kind of determination for them to do through all this, look through COVID and the snow and sunshine and all that. There has been no change. How do you explain that?
Yeah. So as far as the farmers' agitation and the protest against the three bills are concerned, one basic factor which we need to understand is that the government has been raising the MSP, the minimum support price, for the commodities which are covered by the MSP regime. There are 23 commodities which are covered by the MSP regime, out of which the procurement is properly done and effectively done, as is widely understood, for rice and wheat. So if you take rice and wheat, for instance, the MSP of rice and wheat, which was around about 1,350 or 1,400 during 2013-14 or 14-15, is now ruling at about 1,900, 1,850 and 1,900 as of now. This is paddy and wheat. Cotton, for instance, another commodity which is covered by the MSP, the price increase on account of the MSP hike is to the tune of about 50% over the levels as of 2014-15. And procurement by the Cotton Corporation of India has also been effective. So the FCI has been effective in the paddy and wheat procurement. Cotton procurement has been effectively done by Cotton Corporation of India. NAFED, which is tasked with the procurement of pulses and other coarse grains, has been effective. I would say that probably there is need to refine the process of procurement and maybe open more procurement centers for the procurement of pulses and coarse cereals. So this is one thing I believe which has worked in favor of the farmers, and the converse result of this is also the recent inflation rate which we have been seeing, of inflation spiking to levels of 5.5, 6%, is also related to fair and remunerative prices being given to the producers, and the prices of articles of ordinary consumption like tuvar dal, urad dal, etc., going up by about 30 to 40 rupees per kg. That is one aspect. Now, coming to the three bills which the government has introduced, I have been interacting with farmers. We should, even as we understand and realize that there is protest from farmers in Punjab, Haryana, and probably the Uttar Pradesh, Western UP, there are farmers associations in Maharashtra, and it has been reported in newspapers, who
Madhya
actually
Pradesh too. Madhya Pradesh also, right?
Madhya Pradesh also, who want these bills to be implemented. Now, in intent, at least, I believe that this is something which will do good to the farming sector. I shall explain why. The first bill relates to the freedom for the farmer to sell at a place of his choice to a buyer of his choice. That is, he need not be bound by the APMC Act. He need not be bound by the regulations of the APMC, where he is forced to sell only at the mandi and only to Arthiyas. Now, I believe that where the mandi system is not so strong, number one, and where the social compact of the mandi system is different, the opposition is less, and probably people want this mandi system to be dismantled. I shall come to the social compact system because I worked in areas covering Punjab and Haryana. The Arthiyas, or the commission agents, who procure from the small farmers and then sell to FCI, they are the aggregators, are people who are related family-wise and financially also, who support the smaller farmers. And they have been the conduits for the farming activity, giving credit for the farming operations when there is a need, number one, giving credit even for personal requirements for expenses related to education, medical emergency, for marriage, etc. This Arthya has been the regular financier. He is also in some way related in a family or in a social sense to the farmers who till the fields. So there is a social compact and utility for these Arthyas. And probably there has been there was a need to communicate the intent properly, take them on board in order to convince them about the potentially good result that may come, be that as it may. Number two is the contract farming. Now, I have seen, I've had experiences of contract farming benefiting farmers. For instance, there are potato growers in Maharashtra who have contracted to farm on behalf of PepsiCo. Now, because this conversation takes place in Kerala, I know very well that if PepsiCo were to come and say that they will procure something from Kerala,
Nobody will.
nobody would want it. But there are farmers who have benefited under this arrangement. I know of a
No,
similar
but that is the
arrangement.
usual suspicion against capitalism. That's all. It may not be well founded.
Yeah,
May not be well. China has learnt it. China is practicing it. They criticize capitalists, but they adopt those methods which suit them.
absolutely.
One of the
So
other ideas I heard that one could do, one could get over the present difficulty. I don't know if you have heard this suggestion, that government has plenty of land, more than it can use. And therefore, why not? Two ideas. One, why don't you sell this land to people who can build homes so that the number of homes will multiply? Or give it to the private sector. Let them
right.
build millions of homes in these lands which are lying fallow, and then sell it to the middle level or lower level, lower middle class people, and thus generate a huge amount of money and also give them satisfaction that in habitat they get better. Is that a wise approach?
Sir, in principle or as a concept, I would say there is nothing that anybody can quarrel with this idea. But in implementation, as we have seen, because a similar concept was tried out in the case of the medical, facilities. For instance, in Mumbai, public land was given up for private hospitals on the understanding and on the basis of commitments that a certain percentage of poor patients will be treated either as outpatients or beds will be provided. But I had been living in Mumbai for 3.5 years. I used to make inquiries of people who are in need of services by these five-star hospitals which have come at the on land provided by the government. But sadly, none of these hospitals have been open about the availability of these facilities, and these are built in such a way that an ordinary person would never ever dare to enter the premises because these are very
But in
popular.
Canada, there is a system like that. You can go to a private hospital, however expensive it may be, and then the government will underwrite something. There is a project like that in Kerala now.
If it
Is
can
it
be so.
related to the land that has been allotted to them?
Yeah. So if the implementation can be overseen because Kerala is a different state, awareness levels are high, and then if there is any issue whatsoever, it is highlighted in the media, which is all a good thing. Sometimes, of course, as we all know, it gets carried to the extremes. But on the whole, I believe that being transparent, being open, and being literate and being aware is a positive thing for social and economic development. So Kerala is a model in that sense. But as you probably are better aware than me, there are states in India where the awareness levels of these kind of facilities, which ought to be provided by people who have been provided land and other facilities by the government, are not fulfilled. And then there is no pressure from the people. Politicians also are have their own access to grind and then are probably hand in glove with the promoters of these kind of institutions, with the result that the benefit that ought to come and accrue to the people for whom this idea is presented and then the concept is practically implemented, they don't get the benefit. So the biggest worry in such suggestions would be that if implementation is overseen and then ensured that the benefits reach the poor at least to a certain extent, as you said, maybe if land is given, 70% or 65% could be commercially built and 30 to 35% could be given on the basis of concessional rates or maybe given as part of some kind of dole to people who are homeless. But I believe conceptually right, but as in everything else in India, in implementation will lie the proof of this concept.
Okay. And the other suggestion that same person has made is about manufacturing of quality goods at reasonable prices. The example he gave was that we buy 500 rupee, 400 rupee shirts from Bangladesh and sell it in the market here. And we make our shirts which more than 1000 rupees. Why this different? Why can't we do 400, 500 rupee shirts which are usable in a reasonable social context?
Yeah, I think this question is being raised now increasingly because Bangladesh and Vietnam are seen as competitors to our traditional areas of exports, that is garments. Now, I believe the labor conditions in Bangladesh are similar to the labor conditions that were in India 15 years ago. I've been to Tirupur, which is one of the garment hubs in India, and there probably some of the practices which were followed by the units in India exporting at that time, the practices may not stand the scrutiny of the foreign buyers themselves. Number one. Number two, how does the society and the government approach this issue? Now, in fact, the Hindustan Unilever CEO himself told me on the day of a national hartal in Bangladesh, here they probably will permit a car with an ambulance sticker or hospital sticker. If textiles or garment sticker is there on a vehicle, that is not stopped in Bangladesh on the day of a national hartal because the hartal, yeah,
We export.
yes, because the hartal enforcers realize that this is a segment based on which people are working, people are thriving on this export sector, and therefore activity should be allowed. So the enabling system and the structures that are in place to promote and provide for low-cost production is moving away from India, and India is losing its competitive edge to Bangladesh and Vietnam. And that is why, surprisingly, in 2020-21, among the major economies, the only economy to record a positive growth last year was China, major economy. Among the lesser or lower, smaller economies, the only economy in the world to have recorded a positive growth of 3.5% was Bangladesh. And their per capita GDP is almost equal to India, or they are on the verge of overtaking the per capita GDP of India. Population, I believe, is about 16 crore is the population of Bangladesh. And therefore, a lot of things are being done right by Bangladesh. But whether, we will have the political consensus and the political will to follow the path of some of these East Asian economies, and now, of course, Bangladesh, is something which is outside, for the policymakers' purview. But it ought to be done. Otherwise, have to be.
Okay, this other question of wage rates inside India. Like, for example, why do so many migrant workers come to the south? Because we pay a higher salary. Yeah. And why not shift these industries? I'm not talking in terms of Kerala's interests or otherwise. If these industries were to operate in the north, then the cost will be much lower.
There are two aspects. One is Kerala's case is a unique case, as we all know, because the development model is different, the development structure is different. Both positives and negatives are there, and anything that we say might, end up in a controversy than in a constructive kind of discourse. That is the way generally our, conversation takes place. But if you compare the, south, the other states in the south, like Tamil Nadu has done well in attracting investments. Karnataka, a lot of manufacturing units have set up facilities there. Tamil Nadu,
Telangana seems to be doing well.
Telangana is doing well. Andhra is also doing well. And Tamil Nadu, for instance, Sri Perumbudur is an automobile hub. And therefore, the cheapness of labor need not be the only factor in attracting investments. If we can create, because skilled labor is also something which is liked, especially for industries or sectors like the services sector, the IT services sector. And we have seen benefits of that kind of background in the Infosys units having come up in Technopark. And relatively, I believe that our performance in the IT software sector has been better than in other sectors. So there is a great deal of advantage to be derived by having literate, skilled workers who can probably pick up skills at a faster pace. So it is a question of presenting Kerala as an attractive investment destination, and where the political leadership says that we will see to it that there will not be disruptions, we will see to it that approvals will come without hassles, we will see to it that if money is required, then the banks will lend, or the system will be created for the banks to lend, and also ensure that what do you call marketing structures, infrastructure is provided in an adequate manner for the companies to transport their goods. If you remember, sir, around 2009 or 10, we decided among all the states in India that our national highway, the maximum width need not exceed 45 or 30 meters.
Yes.
I don't remember.
Yes.
So,
Yeah.
so therefore, you need wider roads. You need roads which are capable of taking loads of commodities, capable of accommodating trailers. And you can see the difference in the roads if you travel from Bengaluru via Tamil Nadu up to the point of Kerala border. So therefore, there is a difference in our approach which is required. But I believe that of late there has been realization that unless these kind of changes are also made, we may not be able to catch up, or we may not be able to attract investments, especially to the manufacturing sector. So let us hope we will do these things properly. Regarding the other question, the only difference with the coming into being of GST, the states have lost their pricing power because taxation is uniform. Earlier, you could have given tax incentives for attracting investments. Now there is a level playing field. So probably the only carrot which can be dangled is cheapness of labor, but I think it is not very material to a prospective entrepreneur. It is the ease of doing business, the totality of factors constituting the ease of doing business index, which is a good index, and which constitutes or which comprises many factors which ought to be targeted, and where I believe we should be at least in the top 10 category. Telangana was number 2 or number 1 in the last two ease of doing business index surveys at the national level.
Yes, but this is the strange thing. As far as sustainable development indices are concerned, Kerala is supposed to be number 1, right?
Yeah.
That's what one hears. At the same time, you find that ease of doing business, India is Kerala is 25 or 26 in India, and it is going down. This is very difficult to explain, right? When you have sustainable development index so good, that is one thing. And finally, we are running out of time. So finally, this whole question, as an economist, as planners for the country, the challenge between lives and livelihoods, how does it get operated? You give the lives protection to the health sector, the scientists decide, how you can restrict it, etc. But the bigger debate now in the West, particularly in the United States, they are saying that even if there is a risk, open out, don't wear masks, go behave normally. But that doesn't seem to be working because the disease is increasing, second wave, third waves, etc. Please is coming. So is it a wise idea to open up these for the livelihoods and then invite more loss of lives? And that's a big moral question, big economic question, a big political question. So how does it work in your mind? How do you think it can be balanced?
Yeah, it is indeed a tough question, and I'm not a public health professional, nor have I seen enough of public health discourses to comment on that aspect of it. But from an economic perspective, standing where we are as of now, where we have run through 1 year of almost total lockdown, save for the last part of last year, and the second wave where we have seen the effect of localized lockdowns affecting livelihoods adversely. I think we should overall derive comfort from the fact that out of 42 lakh deaths which have happened, 43 lakh deaths which have happened, the number of deaths in India has been 4.2 or 4.3 lakh. The total number of deaths was the highest in the USA, which was over 6 lakh. The second highest was Brazil, I think 5.6 lakhs. The third highest is India. On a per million basis, our count is among the lowest in respect of countries which have shown a higher absolute number. I think on balance, we will have to take a call in favor of opening up, in favor of allowing normal economic activity, because lockdowns are adversely affecting livelihoods, and lockdowns are probably not effective in dealing with the variant which is supposed to be prevalent in India, as the Kerala example has also shown that despite lockdown we have had a higher TPR. So what is this trade-off? That given the fact that per million deaths are the lowest, number one, that lockdown has provided adverse impact on livelihoods. Number three is, most importantly, we have reached a level of 50 crore vaccinations having been done. 11 crores have got 2 doses. 38 crores have got 1 dose. Totally, it's about 49-50 crores. So the vaccination has gained pace, and if there is no further upsurge in the infection, I think with this vaccination. Sorry.
But will the vaccination be satisfactory in the near future? The numbers?
Sir, I would tend to think that given the pace of vaccinations, from a banking economic perspective, I think the balance will lie in favor of allowing for withdrawal of lockdowns in a localized way, and then try to impose a strategy of micro containment so that economic activity resumes. Because at the end of the day, we ought to have a trade-off. At the national level, I believe that in terms of containing deaths, we have not done badly. And this is not to discount the preciousness of the lives that have been lost. But in terms of the numbers that I just now mentioned, the number of lives lost per million is the lowest, which means probably because of some, some stroke of luck or whatever you might call it, people have survived the COVID. People have survived the infection, and therefore, from a banker economic perspective, I would definitely urge that we open up and then take measures of precautions that are normally taken and increase the pace of vaccination. Because
one advantage that we have in India, that there is no vaccine hesitancy. There are no Republicans going around saying that we will not take the vaccine. So we have an excellent opportunity of investing as much as possible into the vaccine industry. Yes. Are we doing enough?
CapEx, to the extent that as a banker I know, actually CapEx has not happened in any sector except in the pharma sector. So in the last 1.5 years, we have seen existing companies increasing their capacity, not only for vaccination, but in the entire pharma chain. Pharma companies have been doing well. There are new players coming into this field. So, and the government has also been providing incentives, production-linked incentive. Out of the 10 sectors which the government has provided incentives, pharma is one of the important sectors. Out of the sectors where the RBI has permitted priority sector status, pharma, hospitals, funding of hospitals, giving loans to people who are affected by COVID, providing assistance to patients who are affected. anything linked to the pharma industry, the hospital industry, patients who are affected, the RBI has said that it can be classified as priority sector by the bank. So in terms of the policy from the government and the RBI side, they are doing it right. Entrepreneurs are making investments. I believe this, of course, the outcome will take some time for the results to be shown. I believe we are on the right path, not to play down some of the mistakes which we have made, but I believe that the path ahead is brighter, and we probably would have seen the worst of this crisis.
Well, that's a very good conclusion to what we have discussed. But people now will not be very convinced about that. It's an optimism of a banker rather than the optimism of a medical professional or a social worker or whatever, because they feel very dispirited. They feel very depressed, and that is a situation which is taking place. So that is why a conversation with a person like you is important, because there are certain aspects which people don't think about. For a family, loss of a person is worse than anything else under the sun. Let the whole world be finished, but if this man can be saved, that is their approach. And how do you, harmonize it with the larger interests of the country and saying that the numbers wise we are not doing badly, and that is very difficult to convince an individual. At the individual level, it's a tragedy which cannot be justified under any terms. So the economy and the economists and the industry and everything should attend to that also as an important factor. And then your optimism and their determination maybe will bring India into a better situation.
I think humility is the need of the hour for policymakers and for everybody who is trying to deal with this, because there are certain things which we don't know.
Absolutely. That's true. That's true. And we will not know. Maybe 10 years now, we'll be told that all we did was wrong. Even wearing a mask, we don't know what we are doing.
Really don't know.
Okay, all the very best. Thank you, Mr. Adikesavan, for spending an hour with me, and very, very useful conversation. I learned a lot from it, and I hope our viewers will also do. Thank you very much for taking the time.
Always a pleasure talking to you, sir. Thanks indeed.